David Morgan and Money and Metals for the week ending 25th of September 2015. There's an article by Michael Snyder talking about the stock markets around the world. And all of them are off on one level or another. Looking at the United States, right now the Dow is off about 2,000 points from its high of a few months back. China, of course, is off to a 78-month low, off about 40%. And a further comment from me, not Michael, on this, and that is the leverage used by the Chinese. On margin in the United States, you can double down. In other words, for a dollar, you can borrow a dollar. And if it starts going against you, about 35% or so, you get a margin call. China went about 9-to-1. This is reminiscent of the 1920s, where you could use $1 and leverage 9. It's back to the fractional reserve banking ratios. This is absolute insanity, in my view, to allow people to have that kind of leverage on margin nonetheless. So with that kind of leverage, you can see the deleveraging being quite extreme. Again, the Chinese stock market at a 78-month low. Japan, of course, has extreme volatility, and it's off about 3,000 from its peak. Germany, which of course is kind of the stalwart of the Eurozone, is off with this Volkswagen scandal, and I'll have more to say about that in the talking about the metals. United Kingdom, British stocks off about 16% from their peak. France off about 18%. Brazil, which is kind of the leader for a while in the South American continent, is off 12,000 points since their peak, and they are officially admitting to being in a recession. Italy, 15% off. I would watch that area closely, agreeing with Michael on that. India stocks are off 4,000 points, and there is some concern in that sector as well. And finally, Russia is only off about 10%, and this is with some very horrific oil prices relative to where they were a few months ago. And that market is holding up better than all the other 9 that I mentioned. Moving on, the gold market, gold hit about a 1-month high, and on Friday slipped off about 1% after Janet Yellen had mentioned that she's not giving up on hiking interest rates, and she expects that it could happen before the close of 2015. The market's no more than all of us, and time will tell. Moving on to the silver market, there's still good tightness in the retail side, which I've mentioned the last couple of weeks. And then moving over to the commercial side, there's been a pretty significant offtake off of the COMEX warehouses in the commercial bar category. Right now, I looked a couple of nights ago, and we're at about 45 million ounces in the registered category, the dealer category, and that certainly is higher than it's been in years gone by. But it is something to keep an eye on. Whether or not this retail squeeze will push over into the commercial bar market remains to be determined. But honestly, I feel a shift throughout the markets, meaning the macro picture, where I'm seeing a shift take place between the equity markets and the commodity markets. With the commodity markets generally lagging, but as I've always said, the top tier of all the commodities are money, gold and silver, and they have a special place in the commodity sectors, as they really are considered commodities, but in reality have been money for thousands of years. So we're seeing that move, I believe, taking place. I made that call around 2000, and it was accurate, not to the day, but in that year really, where we saw the equity markets start to back off and the commodity sector start to gain some momentum. And of course, with China's lead, we got quite a move into the commodity sector for several years in a row. I think we're going to see a repeat of that, with the exception, that it won't be all commodities across the board. It could, depending on what happens on the inflationary front, but more accurately, it'll probably be in the precious metals markets. I'd like to go a little deeper into the precious metals and talk a little bit about platinum, palladium. Palladium had a big move up this week, about $62, and platinum is scraping lows it hasn't seen for quite some time. And there's a reason for this. Palladium is used as in catalytic converters for gasoline engines, and platinum is used in diesel engines. with this fiasco, I'll call it, going on with Volkswagen and their emissions problems, this has caused the market to readjust, meaning that going out in the future, right now the market is voting there aren't going to be as many diesels made and there will be more gasoline cars made, and that means there'll be a higher demand for palladium than there will be for platinum. At least that certainly makes sense to me. I think that is a solid analysis, not to mention that both those metals are precious metals and do fall into the monetary category from a classical perspective, but certainly not from a practical perspective. And that's it for Money and Metals for the week ending 25 September 2015.